Hello and welcome to Real Commercial Propcast, the commercial property podcast where we look to answer the most common questions for anyone on the commercial property journey, whether you're an investor, business owner, or somewhere in between. The topics we discuss are of general nature only and don't consider your personal objectives or financial situation, so it's always best to obtain independent advice before making any commercial property decisions. Hey there, my name's Tessa and I'm the Head of Product at Real Commercial Australia, and I'd like to give a very warm welcome to my co-host, David Story. David has spent many years in the commercial property industry, working across all asset classes in marketing and communications. David, welcome, and so exciting to be finally doing this with you.
Yeah, thanks very much, Tessa. I'm really looking forward to being a part of this exciting journey, and I'm really looking forward to hearing from some of the industry's leading experts on some of the topics that we're going to cover throughout the series.
Yeah, so as you mentioned, each week we'll be inviting industry experts to help us answer the most common questions when it comes to commercial property. So we'll be tackling questions that we usually hear from new investors. We'll delve into leasing and other questions business owners might have when it comes to commercial property leases and setting themselves up for success. And we'll also be looking at some market trends. So what are some of the topics or questions that you've got on your mind, David?
Oh, look, there are so many questions on my mind about what we could ask in relation to commercial property investment. But if I focus on today's episode, the big question for me relates to how or why you should get started in commercial property. Everyone knows that investing in residential property is a smart investment choice, but the advantages of commercial property are unknown to many people. So this is a fantastic opportunity to look at the reasons why investing in commercial property is often overlooked, and hopefully we can help inform some people on how to start on that commercial property journey. So look, to be honest, I'm hoping to learn just as much as our audience.
Yeah, same here. I'm actually just starting out on my commercial property journey, looking to find a great investment. So I think I'm going to be learning a lot as well. So on that note, today we're kicking things off with a bit of a 101 on commercial property investment. And to help us understand all the fundamentals, we're very lucky to have Yosh Mendis join us today as our very first guest expert. Yosh is Head of Agency New South Wales and is also partner at Burgess Rawson. He's one of Sydney's most prolific sales agents, selling $300 million worth of commercial property in 2021 alone. During that year, he recorded the highest auction result for a Sydney childcare investment and also sold one of Sydney's largest fuel and convenience retail centres. He specialises in the sale of fuel, fast food, childcare and convenience-based retail assets, and his clients are a mix of corporate investors through to mum and dad investors. So his insights today will be invaluable, I know for sure. So Yosh, thank you so much for joining us today for our very first episode of Real Commercial Propcast.
Thanks, Tess. That was a kind introduction, and I'm looking forward to talking to you and David a bit further and diving into some of these questions.
Yeah, good morning, Yosh. Thanks for joining us today. I mentioned in our introduction, I referred to the fact that everyone knows that investing in residential is a smart investment choice, but the advantages of commercial property are unknown to many people out there. So just to start us out, can you just help our listeners understand what the key differences are between residential and commercial property?
Yeah, we get this question all the time, and I think historically the main differences between commercial and residential property are that residential has always lent itself to more a capital growth strategy of investing, whereas traditionally commercial property has always been looked at as more of a cash flow or high yielding passive investment offering. So a number of investors who are looking at residential property would tend to invest in residential, hold that investment for some time and look for the growth in that investment in a 5-10 year horizon. Whereas with commercial real estate, a number of people invest for cash flow. So they're often are positively geared properties and enjoy collecting rent over a long period of time.
Thanks, Yosh. Yeah, that's a really good point you make about some of the differences when you're thinking about a commercial investment versus residential, that capital growth versus rental yields. But can we delve a little bit more into that question of why someone should invest in commercial property? I've heard that there's a few other elements to consider, like tax benefits. You just touched on capital growth and cash flow. What are some of the questions that a new investor should focus on when they start out on their commercial property journey?
So I think the main question is, what are you looking for out of your investment? Are you looking for cash flow? Are you looking for capital growth? Are you looking to flip your property for quick gains through some value add strategies? Sometimes those strategies are more suited for residential, but have successfully been completed in the commercial space as well. Or are you looking for a more set and forget passive investment opportunity with minimal management? A lot of investors that we deal with, and often most long-term commercial property investors generally look for investments with cash flow, are looking for investments with long-term secure income streams. They've got guaranteed rental growth through fixed increases. They're often net leases, so your tenant pays all your outgoings. Traditionally, we find that a number of commercial investment opportunities require minimal management in comparison to residential. We find that your commercial properties house businesses that rely on these properties being presented in a fashion which enhances their own business requirements. So they're managed much better by your tenant. Often the tenants within these commercial properties are essential services tenants, whether it be fast food, fuel, childcare, industrial logistics. So there is an element of security there, which you don't find sometimes with residential tenants, where it's a bit of a pick of the litter, or you're not really sure who your next tenant's going to be coming in. And the other thing is that we find in commercial investments, a number of rental yields that we're seeing are a lot stronger than your residential investments as well. So there is an element there where people are investing in these assets for cash flow and can find themselves, sitting in positive good investments where they effectively just collect rent checks every month. So it is a different strategy to that residential model.
And just to jump in there, Yosh, when you talk about tenants often have to pay most of the outgoings for the investor, what kind of outgoings are we talking about?
Yeah, so traditionally when we do sell a lot of commercial investments, they are net leases. And when we refer to net leases, we refer to the payment of outgoings such as council rates, water rates, often land tax, albeit on a single holding basis, building insurance, all paid by the tenant. And it's quite commercial for those tenants to be paying those outgoings. So, when you are putting together these leases, it tends not to be a shock to tenants to be asked to pay those outgoings through their lease term.
Yeah, thanks, Yosh. Look, you've provided some great points for our listeners to consider on the potential value that commercial property can add to their investment portfolio. You've talked about cash flow, attractive returns, and long lease terms, and those being some of the many reasons that investors choose commercial property. But can we go back to that cash flow point? Because I'm sure that many people who are looking to invest will be interested in understanding rental yields, and I'm sure our listeners would be interested to know what sort of returns they can expect. So this might be a double-barrel question, but can you give us some insight on how rental yields are performing now? Are they returning to pre-COVID levels, or does it come down to which asset classes are performing better than others?
Yeah, I think it's a great question. And I think there's probably two parts to the question. I think with regards to where rental yields are at the moment, you're right. I think there is an element there where, depending on what type of asset class you're seeing or looking at, can dictate where that rental yield may sit as one form. Location's a big thing as well. We find traditionally metropolitan locations versus regional locations. Metropolitan locations are traditionally lower yielding investments. And a lot of that is supported by underlying land value as well with these investments. There is some underlying security there that your capital value within your land will continue to grow. However, within regional locations, we find that rental yields are much higher than metropolitan locations. Again, the opposite is true, where you're more reliant on the tenant and your rental income, as opposed to the underlying land value that property or investment might sit on. I think certainly where yields are at the moment and what we're seeing in that commercial space, I think instead of, as opposed to talking pre and post COVID levels, I think what's more important with where yields are at the moment is referred to where interest rates are as we currently stand. We are in a historically low interest rate environment, and that is what's driven the property market in all sectors. We've seen the cost of debt be as cheap as it's ever been, and certainly been a major driving factor into residential growth in prices. And I think that what we're seeing in commercial is a tightening on those commercial yields alongside where residential has got it. I can say right now in metropolitan areas, in commercial we're seeing yields of, in that 4 to 5% range, sometimes a little bit lower for particular assets. Regionally, we've seen yields anywhere between 5 to 7%. Again, those yields can sometimes shift on either side of the spectrum depending on the asset. But certainly, to answer your question, David, amongst asset classes, we do find right now, I guess the post-COVID world, essential services and certainly businesses that have been resilient through those times are seeing tightening on yields, because it does provide investors a lot more security for their investment property long term. And we're seeing that amongst childcare investments, fast food, fuel, any non-discretionary retail investments are certainly highly sought after by investors currently, because they're just essential services in our day-to-day living.
And certainly doing your research to find a safe investment choice is something really important. And we just chatted about the impact of low interest rates on the resi and commercial markets in terms of rental yields. What about more broadly? What's the outlook for the commercial market?
Yeah, again, another question that we get asked all the time. I think right now we are in a state where commercial property is probably one of the most favoured investment vehicles in the market today. I think where we're seeing equities markets and the stock markets, they're very volatile. And I think right now what we're hearing from a number of investors broadly is that they want stability. And commercial property is that investment vehicle that can provide that. You're finding commercial property provide you with secure long-term cash flow from a lot of the time, corporate and national tenants, fixed rental increases, long-term leases of anything up to between 5 and 15 years. A lot of the times the tenants that we're selling personally are bolstered by essential services sectors or heavily supported by government-backed industries like childcare. So we're finding that a number of people who were traditionally residential investors and have been long-term residential investors or have been long-term investors in equities markets are now actually turning their head to commercial and transitioning into the commercial market and asking us, what is the best asset classes to invest in? Traditionally we've invested in these markets and we feel that we're not getting probably the returns that we once were, and we see commercial property as that preferred vehicle. So we are finding new entrants into the market who are looking at these essential services products, or albeit some of these other sectors that we've talked about in the fuel, fast food, childcare, convenience retail markets, having new investors who traditionally wouldn't have invested in these sectors a couple of years ago, which is really bolstering our commercial market a lot with new investors.
Yeah, it's interesting, Yosh. I'm really glad that you touched on that security, because I think that's one of the elements that everyone looks to the residential market for. They feel as though it's a very secure investment. But just the way you've actually described, some of the industries and even the government-backed businesses out there that can lead to those long-term rentals, those long leases, providing that security that the investor needs to know about is probably very assuring for our listeners out there. But look, just a really quick question before we run out of time, and I'll probably push you on the spot as well, because you've dealt with many new investors throughout your career, and you've seen where the mum and dad investors have been entering the market and how they've generated success. I mean, I know, for example, that you've seen many of the mum and dad investors getting into the fuel and retail convenience sector as some of the large global oil companies divest in that market. But here we go to put you on the spot. What would your advice be in terms of the sort of asset that a new investor should consider as they start out on their journey? So if I came to you and said, right, I want to start investing, where would you point me?
So, yeah, David, it's a great question. I think it's something that we get asked a lot. And following on from what I was discussing before, we have so many new entrants to the commercial market and a number of people looking at this investment vehicle as their preferred investment strategy moving forward, a number of people are asking us, where do we start and what asset classes should we look at? And I think in terms of a bit of advice, I think I would certainly go to investors and say, do your research, have a look at what investment asset classes suit you. Speak to your trusted real estate advisor and find out what's happening with a number of these asset classes and where they would probably point you in what direction is most suitable for you. Identify your budget. I think this is important in the sense that after you identify your budget, it does actually narrow down some of the asset classes that you might be able to look at. An example of, and I've been dealing with the first-time investor recently, and it's a conversation I've had multiple times, but an example of a great asset class to look at if you are a first-time investor is childcare. I think it's a great first-time investor asset class. It's a segment that is very relatable for all Australian families. Right now, we're seeing the childcare market really boom, and certainly with a number of government incentives and support for the sector, and the story around obviously having both parents getting into the workforce as the cost of living for a number of things continues to increase, the reliance on things like childcare will continue to grow. So that the supporting story behind that is continuing to increase and fuel that childcare investor market. And what we're finding as well is that people can relate to childcare investments, particularly when you're going from being a potential residential investor, going into potentially commercial. The structures and the way the properties are managed in childcare, there are similarities. So you can relate to that investment strategy or investment asset class a lot more than, say, if you went from residential into industrial or some other sectors where they do differ in their appearance and how you do manage those assets. So I do traditionally put childcare at the forefront of people's minds as first-time investors, because it is one of those easy transitions from the residential sphere, and they are, in my opinion, probably one of the easiest properties to manage. The childcare tenants are on long-term leases. They pay all the outgoings. They have fixed increases. There's secure long-term income streams. Traditionally, your operators within these childcare businesses are also families, and they take care of the properties very well because they want to make sure they present these properties exceptionally to their client base. They are housing children on a day-to-day basis, so they do take care of these assets very well. So it's certainly an asset class that I certainly probably put at the forefront of people's minds when they're first-time investments.
No, that's awesome advice. And hopefully the worst damage is some crayon on the wall, which you can just get some paint over that. But that wraps us up for our very first episode. So Yosh, thank you so much for coming along and giving us a 101 on commercial property investment. I've really appreciated having you on today.
No, thank you for having me, Tess. Thanks for having me, David. I really appreciate it.
If you enjoyed this episode, make sure you check out our next one, where we'll continue to tackle more common questions you may have related to commercial property. Yosh spoke just now about doing your research on different commercial asset classes, and that's exactly what we'll be covering in the next topic. So it's a great segue. But for now, thank you for joining us on Real Commercial Propcast, brought to you by the number one address for commercial property, realcommercial.com.au. Don't forget to subscribe wherever you listen to your podcast so that you never miss out on a new episode. Catch you next time.